On CNBC interview is James Reinhart. He is the CEO of ThredUp, along with our own Courtney Reagan, who is one of those active users.
I am. James, thank you so much for being here with us today. Really appreciate it. Kelly ran through some of those stats about the stock. And on the call, both you and the CFO really took time to sort of talk about the scrutiny that younger companies get when it comes to capital allocation. You took time to go through your competitive advantages. Do you feel like your stock has been unfairly beaten up?
Yeah, well, thanks for having me, guys. I think a little bit. Look, I mean, the business grew 68% in the fourth quarter, continued to show growth in all those key metrics. So I think a little bit is investors making sure that they understand the story over the next year. We told investors last quarter that it was going to be a heavy investment in the first half of the year to continue to build out our moat. And so I think some of that, Courtney, is investors, digesting that news, making sense of our remarks. And I think now you can see the rebound in the stock reflects investors get it. They understand those investments and how that generates long-term profitability.
James, it's Kelly here. Just a quick question, if you could give us some clarity on the consumer right now. Are you experiencing still strength? Are they taking, I don't know if you guys are experiencing any price increases overall. Are you seeing any signs of a slowdown? On the front lines, what would you say about the U.S. consumer as gasoline prices spike?
Yeah, I mean, look, it's a rapidly changing environment. I think the consumer is softening, in a broader sense. But I also think you're dealing with, stimulus from last March, which consumers are lapping. But everything is going up. And I think, great businesses have to figure out, what do they pass on to the consumer versus what do they stomach in the near term? And I think we're having those conversations every day such that we can build the biggest and most successful long-term business. And I think that's what great companies do, is they figure out how to navigate these very difficult times. And I think that's what we're doing.
James, as a follow-on to Kelly's question, in the third quarter, you talked about taking down your average pricing. We obviously are now in a period of very high inflation overall in the economy. So where does that leave your pricing for the end consumer as you're trying to meet consumers' demands in this challenging environment?
Yeah, I mean, I think that's the rub, is we believe there's opportunity to carve out more share of customers in the near term. But there's also the reality that the prices have gone up even since that last call, Courtney. So I think we're trying to figure out whether it's freight, logistics, labor, where is it that you can pass on those costs to the consumer? But look, I live in California. Gas is heading to $6 a gallon. It's tough out there. But look, I think there's going to be some stability in the back half of the year. We're thinking about our business having stability in the back half of the year around our unit economics. And we just have to get through this very difficult time for the consumer. But we like the long-term macro environment for resale broadly, which is going to be growing really rapidly.
James, your EBITDA losses are getting smaller at down 14% from down 28% a year ago. But of course, as you mentioned on the call, investors are getting impatient. They want a path to profitability. You said you want to drive sustainable growth and profits over time to get there. What is that time? How long until there's no more losses and we're reporting profits?
Yeah, look, I don't think we're going to put a quarter on the board. I think the investments we're making in the first half of the year will really generate leverage as we move into the back half of the year and into 2023. We noted on the call no new infrastructure investments until 2025. So if you think about it, we're going to be leveraging all of the assets we've built over the last few years and this year over the next few years. And so you should see pretty significant leverage from the business as you get into 2023. But of course, we want to make sure the investments we're making now drive those growth rates and profitability as we get into 23 and 24, and not get too caught in sort of the near-term micro of investor sentiment. Because I think that's where businesses go wrong, is they make these short-term decisions that ultimately impact the long-term opportunity.
James, very quickly before we let you go, we know that you acquired the European Remix resale business. You have operations in Bulgaria. I believe you have a team in Ukraine. Can you just very quickly tell us what's going on with your European operations?
Yeah, I mean, my heart goes out. We do have close to 50 teammates in the Ukraine. Many of them have been able to leave, but some are still there. That's a situation we're monitoring. Our business in Bulgaria operates in 9 countries in Central and Eastern Europe. We don't operate in the Ukraine from a selling or sourcing perspective. So I think we're insulated from that impact in both the Ukraine and Russia. But, consumer sentiment is something we have to watch in those markets if this war continues. So something we're keeping an eye on, and most importantly, trying to keep our folks safe in the Ukraine. I think that's where my head is at.
Wow. James, thanks for joining us today. We really appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.